Okay, good day everyone. My name is Indali from Indonesia and I will give a presentation about intraday technique price cluster analysis. Day trading strategies are essential when you are looking to capitalize on frequent and small price movements. The market always moves in trend. During an uptrend, focus on taking long positions. During a downtrend, focus on taking short positions. Intraday trends do not continue indefinitely. Trades can be made before a reversal occurs. Fully understanding the rules of intraday, which is price movements are more volatile and easier to be broken, should possess a necessity for traders to be alert in taking action. Before diving into intraday, it is most important that traders view the wider time frame. Combining the two is by looking where the price cluster resides. To understand the intraday price cluster, let's turn to how a spider weaves its web. When a spider weaves its web, it starts by creating the center, then moving outwards. Weaving one strand of spider silk to another makes it all interconnected. Starting from the smallest circle's outmost side, making its way weaving into the innermost web. Spiders weave web to trap its prey. Every silk strand is linked so strongly to one another that makes it impossible for a caught prey to escape. Price move as well, from the smallest time frame to the largest, and they are all interconnected. Every time frame is strongly connected. Hence, traders need to understand the use of grabbing opportunities given by the market. Price cluster is seeing and finding price connection formed from various time frames. I will be combining Fibonacci with pivot point in various time frames. Fibonacci retracement is created by taking two extreme points on a stock chart and dividing the vertical distance by the key Fibonacci ratios of 23.6%, 38.2%, 50%, 61.8%, and 100%. Once these levels are identified, horizontal lines are drawn and used to identify possible support and resistance levels. Of all the possible percentage retracement levels, the 38.2%, 50%, and 61.8% are the most significant and widely employed. These are very significant levels during market reversals, especially when trying to determine if a reversal is merely a secondary reaction or a full change in primary trend. A pivot point is an indicator used to determine the overall trend of the market over different time frames. It is defined as the typical price based on yesterday's high, low, and closing price. The pivot point is the average of the high, low, and closing price from the previous trading day. The pivot point is the basis for the indicator, but it also includes other support and resistance levels that are projected based on the pivot point calculation. All these levels help traders see where the price could experience support or resistance. To find significant level for market reversal, use Fibonacci retracement over a larger period of time. Fibonacci retracement measures the percentage from the present wave, while pivot points measure trend of the market from several time frames, such as daily, weekly, and monthly. A pivot point that overlaps with Fibonacci level becomes a stronger support or resistance levels. Like a spider web made to ensnare prey, so do traders use pivot price cluster to wait for the price to come and hit their trade setup. Price clustering is manifested in some prices being observed more frequently than others. These clusters may be either support or resistance, depending on whether the price is above or below the cluster. If the price is above it, we may see that we have a support cluster. Conversely, when price is below it, we may see that we have a resistance cluster. This is because clusters represent barriers to price action. Results from Fibonacci and pivot point measurements are static and remain at the same prices throughout the day. This means traders can use the levels to help plan out their trading in advance. Quoting Mike Delafiore, trading is not about being right. Trading is a game of math. It's about finding setups that offer you a good risk reward and pulling the trigger. Thank you.